As the business environment changes permanently, companies find that they need to adapt to stay relevant. Some also realize that underperforming or unperforming units are weighing on profitability and share price, while yet others repivot their business around sustainability.
These are all drivers that are going to last for a longer time. We've seen pivots before, especially after the global financial crisis. But I think if you look at the sort of scale and the boldness, we've definitely seen a much stronger acceleration this time around.
One sector that has suffered a double whammy is the offshore and marine sector. The pandemic has impacted the shipbuilding business as customers defer deliveries of rigs and offshore support vessels. The sector is also facing a backlash over its carbon footprint. In response, it's moving towards cleaner oil and gas solutions such as natural gas, and diversifying further into renewables and other clean energy sources. To help it ride out the downturn and transform its business, Singapore's offshore marine player Sembcorp Marine is raising another 1.5 billion Singapore dollars in a fully committed rights issue. A Sem Marine spokesperson told Moneymind that the funds will be used to beef up its working capital, fund day-to-day operations, and repay debts as they fall due over the next year and a half. This 1.5 billion is on top of 600 million Singapore dollars in net cash proceeds from last year's rights issue. Of that amount raised in 2020, 300 million has already been used for working capital purposes.
In the case of Sembcorp Marine, it does make sense that it has a strong cash pile so that it can go out and bid for bigger contracts out there and know that it has the working capital to complete that project, and that will give customers a lot of confidence in the business.
A fully owned subsidiary of Temasek has committed to subscribe for up to 67% of the rights issue, with DBS underwriting the rest. Temasek says the recapitalization efforts will further enhance Sembcorp Marine's ability to secure contracts and pivot towards renewable and clean energy. As part of its transformation, Sembcorp Marine is also exploring a potential combination with Keppel Offshore and Marine. If all goes well, this will create a stronger player in the offshore and marine, renewable and clean energy sectors.
Sembcorp Marine was trying to bid for the same contracts that Keppel was bidding for, and they were undercutting Keppel in order to get the contract. And so they get one contract, and then Keppel says, well, we're not going to stand around and let them take all our contracts, so we're going to cut our price as well. And the only way that you can solve this problem is to merge the two companies together to form one company.
The combined entity will also have a greater competitive edge on the international stage. Operations-wise, there will be synergies from combining manpower and capabilities. And this, the company says, will help it become a stronger player operationally and financially.
There can be manpower synergies for one. There can be yard efficiencies to be derived. And of course, as they combine, they will be able to share expertise with one another and provide greater value add to their end users and customers.
In a corporate restructuring, there is no one-size-fits-all solution. A combination makes sense in some cases, while in other cases, staying trim and light appears to be the much preferred route.
What we call the asset turnover, which is the amount of sales you get on the amount of assets you use in the business. And that, I think, is probably the way that a lot of companies are looking at how to improve the ROE. How can I get more sales for less assets? So a lot of companies are looking at asset-light models. In other words, hiving off their assets to somebody else. And then they can actually sort of look at the business unit without that sort of heavy thing called the asset.
Apart from the offshore and marine industry, market watchers say other sectors are ripe for restructuring.
It'll be broad ranged sectors in property development to industrials to energy utilities will definitely see more change, especially in the conglomerate side as well. One of the ways to look at it is any sort of major sector that is going to be impacted by things like climate change will have to change and restructure. And at the same time, sectors that are frontline COVID driven sectors again will have to relook at their business models to fit the new normal.
They highlight the ride-hailing and taxi business as one example of a sector that is ripe for disruption.
In the case of ComfortDelGro or the other taxi companies, why was it possible for a company like Grab or previously Uber and now Gojek coming into Singapore and grabbing a share of our market? What is it that they provided that ComfortDelGro did not provide for the customer?
As Singapore firms clean up underperforming units, look for new growth drivers, and refocus their business, observers say this wave of restructuring will be good for the markets.
It'll make the market a lot more relevant within the region, and I think this will bring in a lot more interest to the Singapore market as well, because you have all these huge companies changing direction, changing the way they're addressing their strategies. So I think it's overall a positive move.